Welcome back, ladies and gentlemen. Robinhood gets fined again. This time, they're happy to settle the issues that they've had, especially regarding AMC and GameStop. Robinhood was fined $26 million by FINRA. Meanwhile, retail traders in GameStop and AMC lost out on billions of dollars when Robinhood shut down the buying of AMC, GameStop, and 13 other securities. We're seeing here a multi-billion-dollar crime, and all they got is a tiny fine. Surprise, surprise. Robinhood, should I say robbing hood, right? Robbing the hood here. The so-called champion of the retail investor has been caught red-handed engaging in deceptive practices that costs their own customers millions of dollars. What's the crime? Well, routing your trades to high-paying market makers instead of those offering the best prices, all to line their own pockets. This malpractice led to inferior trade executions, costing customers $34.1 million, a figure that dwarfs the measly fine that they paid to the SEC in 2020 for having done so. The insulting penalty, fast forward to now, and Robinhood is yet again under fire, this time agreeing to a measly $29.75 million settlement with FINRA for a laundry list of violations. And of this, of course, retail investors only get $3.5 million. $3.5 million across millions of people that were affected. So you'd be lucky to get, what, $10 at best? I know several people out there that have lost many, many millions from this alone. Inadequate anti-money laundering programs, to put it simply. Their failure to supervise social media communications and providing inaccurate disclosures about market order handling practices. These egregious actions, folks, undermine the very foundation of fair trading. Yet the penalty is a slap on the wrist for a company that raked in over $1 billion from payment for order flow in the last year. How can a company that systematically exploits their users get away with such tiny fines? These penalties are a drop in the ocean compared to the profits amassed through unethical practices. It is a stark reminder that Wall Street continues to prioritize corporate greed over investor protection, robbing the hood, leaving retail investors defenseless against financial exploitation. The reality is that it's time to demand accountability and push for stricter regulations that truly deter misconduct, because this hasn't stopped and it's not going to stop anytime soon unless you make it stop yourself. We have to stand up against these systemic failures that allow these injustices to persist. The integrity of our financial markets and the trust of millions depend on it. Our markets are a fucking joke, and enough is enough. At the same time, we see dark pool trading has gone parabolic. Something big is lurking in Wall Street's dark pools. You can see what happened under Gary Gensler. The dark pool scam has been exposed. Wall Street rigs the game against retail investors. You have been lied to, you have been cheated, you have been robbed. While you trade on public exchanges, thinking you're getting a fair deal, hedge funds and market makers and broker-dealers like Robinhood and IBKR, Webull, are using dark pools, private secretive trading venues, to manipulate prices, suppress stocks, and siphon money out of your portfolio. Your orders never reach the real market. When you buy a stock, you think your orders hit the Nasdaq or the New York Stock Exchange. You are wrong. Market makers buy your orders from Robinhood and Charles Schwab and Fidelity and route your trades into dark pools where they control the price, block momentum, and prevent fair price discovery, where you get fed fake shares called synthetic shares that are really just ones and zeros in your account that actually should never exist in the first place. This artificially dilutes the stock price, and manipulation is the name of the game here, folks. Institutions use dark pools to buy low and sell high. while retail investors get screwed with artificial price suppression of your favorite stocks, the stocks that you're trying to buy, you're trying to make money off of. It's your money, but it's their playground. And they use these high frequency trading algorithms hidden from public view to front run your trades, to scalp profits off every order and keep retail traders in the dark. Dark pools are the reason why your favorite stocks don't move. Ever wonder why your favorite stocks seem stuck no matter how many people are buying? That's because hedge funds route buying pressure into dark pools while letting sell orders hit the public market. This gives the illusion of endless selling and tanking prices. This is how they control the narrative and keep retail investors losing in not just one or two or three, but a plethora of stocks. In all the stocks across the market that these hedge funds and market makers are not invested in, that they are trying to short, so that they can maximize their profits and make sure that you lose money. Now, how does this affect you? Well, honestly, the game is fucking rigged. And unless you do something to change it, nothing is going to change. Lit Exchange is the retail trader's revolution. We don't have to play by their rules anymore. You can enter Lit Exchange, a platform built to destroy the dark pool monopoly and give retail traders a fighting chance. No more dark pool scams. Trades on Lit Exchange are automatically routed to a fully transparent lit market, so price action reflects true supply and demand. So when the company launches operations, not only will you be able to trade fairly, but you can actually also own the company now, before its launch and before its IPO. There's no payment for order flow bullshit to price distorting dark pools. Unlike major brokers who sell your orders to the highest bidder, aka hedge funds and market makers and brokers that are screwing you, Lit Exchange ensures that your trades work for you, not against you, by routing your orders to lit exchanges, hence the name. Not to mention the AI-powered trading intelligence that allows you to achieve a level of swarm intelligence with the thousands and hundreds of thousands of people in your favorite stock, even millions. Instead of hedge funds using AI to outmaneuver you, Lit Exchange puts AI in your hands, leveling the playing field with real-time analysis and predictive insights, giving you a leg up. The revolution is here, folks. Over 340 retail investors have invested over $600,000 in Lit Exchange. And pretty soon, we are going to reach our goal, and you will not have the opportunity to fund your accounts any longer. So, you should consider doing your due diligence, view the pitch deck, the business plan, the auditor's reports, the memorandums, etc., and consider investing in the company for yourself. And when we IPO as planned in the future, you would then have the opportunity for a significant liquidity event. But that's not all. The Nasdaq is facing huge public scrutiny, folks. Travis Anderson says, you should be sued. All right. Wouldn't be the first time, my friend, and it wouldn't be the last. That's for sure. It is, in fact, doing a seed run, Steve Maynard. This is the only time to invest because retail investors will not have this opportunity again until the IPO of Lit Exchange. So that being said, you have a once-in-a-lifetime opportunity to invest in the private equity because it's the first time in the history of the world that an upcoming stock and crypto brokerage has given retail investors the chance to own the company prior to its launch and IPO, thanks to the Jobs Act of 2012, Regulation CF. Keep that in mind. This is the first and probably the last time that this is ever going to happen. Definitely the last time that Lit Exchange is ever going to offer a investment round to retail investors or to probably any investors, as a matter of fact. But in a stunning development, the Nasdaq has decided to terminate its clandestine high-speed trading service following intense regulatory scrutiny and allegations of unfair practices. They utilized fiber optic cables to significantly reduce trade execution and secretly offered it to select clients. Of course, this granted them a substantial advantage over their competitors, right? And the revelation of this undisclosed service has sent shockwaves throughout the financial community, raising serious concerns about market integrity and transparency by Nasdaq. Competitors who were unaware of this offering, covert offering at that, very clandestine if you will, accused Nasdaq of compromising the fairness of the trading environment. And I think it was McKay Brothers, a telecom group in the U.S., alleged that Nasdaq was providing certain customers with access to these faster fiber optic cables for a monthly fee of $10,000 without public disclosure. This incident underscores the escalating technological arms race in high-frequency trading, where firms invest heavily in ultra-fast infrastructure to gain an edge. And of course, this has been long controversial, as many people have known, with critics arguing that they create a two-tiered market, undermining the principles of fairness and equal access. Now, in response to the backlash here, Nasdaq is discontinuing the service, but also undertaking significant upgrades to their main data center and implementing measures to ensure equal access to the trading infrastructure. These steps, of course, aim to restore confidence in the exchange's commitment to a level playing field for all market participants. And this serves as a stark reminder for everyone the critical importance of transparency and fairness in financial markets. Regulatory bodies and exchanges have to remain vigilant to prevent practices that could erode investor trust and destabilize the integrity of the financial system, like Nasdaq high-speed trading for the richest of the rich, like dark pool trading for market makers to front-run your trades and be able to manipulate your orders and your stock prices, like Robinhood restricting trading in meme stocks like AMC, GameStop, and the SLV ETF for silver, and many others. And of course, the restitution, a measly $3.75 million, I believe, is going to go to Robinhood's customers, millions of customers probably, because they practiced collaring of market orders, which led to trades being canceled and re-entered at inferior prices. And of course, Robinhood did not admit any wrongdoing in agreeing to settle, and said that they has remediated the problems, which date back to 2014. This has been going on for over a decade, folks. These are the people that you trade with here on Robinhood. Naturally, they are more than happy to settle the allegations, says Erica Crossland, after robbing millions of retail investors the ability to make billions of dollars. Folks, you can put up with this if you want. You can continue to trade with Fidelity and Schwab and Robinhood and anybody else that you please. Just know that this is not speculation. These are facts. And none of that is going to end unless you decide to end it for yourself. Hence, Lit Exchange. Do yourself a favor. Make a proper investment. U.S. banks. Huge shout out to Wiz for this post, in case you guys didn't know. He says U.S. banks racked up $118 billion in unrealized losses in the last 3 months. And the FDIC, in case you guys didn't know, has put 66 banks on the problem list. This is not just cracks forming. This is a full-blown structural failure, he continues to say. And I have to agree with him on this, as we have been covering this topic for years on this channel. Liquidity is vanishing, swaps are unwinding, counterparties are on edge, and markets, now you've seen what's been going on with markets the last 6 weeks. Oh, the globalist agenda does not appreciate what Donald Trump is doing to help the American people. We're not just watching history, we're watching the system break, said Wiz. Cheers, my friend. We're going to be so fucking rich. But unfortunately for many people, well, they're not. And that's okay. It's unfortunate. Ann says, Grok tells me AMC will not go over $100 to $500 a share. I disagree. Am I right? Well, Grok is just an algorithm that searches the web and uses other people's opinions and mainstream media posts to make decisions. So you can't, and not to mention, Grok does not make decisions in the stock market, folks. You do. Good afternoon, Suray. It's great to see you, my friends. Eagle Eye, cheers to you, my friend, and all of the Lit Exchange founding members in the comments right now. I see you guys. Everlong's been waiting on this crash since 2022. Yes, my friend, as have many of us. So again, folks, we are nearing your final opportunity to invest in the only stock and crypto brokerage that has utilized the Jobs Act for your benefit to give you the opportunity to own equity in a company before its launch and IPO. Don't miss out. We are nearing our stretch goal, and we will begin advertising this publicly. So far, this advertisement that you're seeing right here, which is my speaking organically about it, we have not spent a single penny on advertising it. But that will begin here in the month of April, and at that point, it will likely fill up quickly. So do your thing. If you haven't yet funded your account, please consider funding your accounts. If you have not pledged, go check it out. Do all your due diligence. Read all the disclosures, the highlights, the information about the company, myself, and my partner. And you can then do your own due diligence and invest in the company should you choose to do so. Ladies and gentlemen, I wish you peace and wealth. Have a great rest of your day. Cheers.